Alright guys, in this video I'm going to show you guys how to use the MagnOpus trading template to do trading analysis or to track how price moves over time and then do trading analysis with it as well. So for this video, I'm just gonna do my generic how to track price over time. Um, and then in the next video, I'm gonna show you guys how to put that in together all together so that you can go ahead and build trades using this template as well. So first, we're gonna do analysis of how the markets is moving in terms of trading, and then I'll show you guys how to input a trading program, a trading template on there. So first things first, let's go to day one, right? I'm just be stating some facts for you guys, and then you can put all that together. So one of the first facts, especially when I was learning how to do technical analysis and how to trade, I wanted to build a system that does technical analysis and does trading all in the same system. And that's what I came with. And one of the facts that I learned is that, especially as a day trader, you cannot trade all information, even though all the information is important. There's only so much. Your trade is going to only be open for a certain period of time. So that's why I really had the session one and session two. For when I was day trading manually, session one was the area that I didn't trade, and session two was the area that I did trade. So I made it two different colors, and only the information that would happen in session two is the information that I felt that was relevant enough for trading. So that's the only information that I was looking into, and I just basically ignored what was happening in session one. Even though the information is relevant when it comes to like watching how markets is moving in relation to price and time. I just needed this one session. All right, so enough of the blabbering. So, like you remember how the template goes. Session one is from 5 p.m. To 5 a.m. Session two is from 5 a.m. to 5 p.m. And since we're dealing with session two, that's what we're gonna be looking at first. So first thing I get grab a trend line, and I'm going to drag it for the entirety of session two straight across. And you could go ahead and do something like that. We could make this line black here, make it text black, and then just using the price from this chart I'm trying to figure out what time the price open at 5 a.m. So the 5 a.m. candle open price is where I want this black line to be at. So another point of information or a bit of information that I noticed is that when I was building my trading strategy, I noticed that Euro USD moves a certain amount of pips every I don't want to say certain amount of pips, a minimum amount of pips every day. So I figured out after measuring days and days, months and months, weeks and years of data that it doesn't matter whether it's summer, it doesn't matter where it's a different trading environment, Euro USD is gonna move at least 20 pips in range every day. And for sure, definitely by session two, which also falls within the New York trading time zone. Not to say that I wouldn't do that in a session one or doesn't do that altogether, but yeah, uh, um, Euro USD moves the average of 20 pips a day. So that's what you want to work out. That's how I built my trading strategy, and this is how I built my the template further to track how price moves proportionately. And that's another important thing. That it's all proportionate. So if I take my arrow over here, hover over 5 a.m. 5 a.m. If I look at the top left of my screen, it's gonna be the O stands for open, H is high, L is low, C is close. That's the open, high, low, close of the Japanese candlestick that we're hovering over. So if I hover over the 5 a.m. and realize that market's open at 1.16825, so I'm gonna take that number and I'm to 1.1616825, and then I'm just copy it, paste it, and that's gonna bring that trend line or that line um and identify the 8 a.m. candle open, right? Not the 8 a.m. candle, I meant the 5 a.m. candle open. Now, once I got the 5 a.m. candle open here, next thing I'm gonna do is I'm going to make bullish and bearish call them levels, which is it's just a set amount of pips away from the ATM candle open. So my levels are always gonna be 10 pips away. So let me just throw two levels for you guys. Let me change the color. Let's identify that all bullish levels with like a darker hue green, not the bright green one that comes with TradingView, but like a darker one. And then we have that there. And then I'm going to take one. I already have it here. 1.16825 is the where I cloned this line. It just kept the exact same price as the next one, but it's not actually. It's actually at 1.16874. But it's what I named the title of the line. So I'm gonna add 10 pips to it. I know how to do it with my head, but I'll just do it on the calculator for you guys. So we're gonna take 1.16825, and we're gonna add, since we're trading Euro USD, 0.001. That's going to give us uh 1.16925, and then we're gonna keep on building it like that. Let's throw that, paste, paste. That's gonna give us 10 pips above. Wait, paste it, paste, and then I'm gonna change the title of this one. There you go, paste, and then we're going to do the same thing, but we're gonna do this for bearish, move bearish from the ATM candle open. Take that, paste, take that, and do this, boom. All right, and then I see we're just only gonna be analyzing data that's happening within that range. Um, Here we go. Let me drag that down a little bit, make it get a little closer. I think I gotta fix my box a little bit. Give me a second. And then let's go do. Subtract another 10 pips minus 0.001 is gonna give us 1.16825. Copy that over. Paste, paste. No, that is not correct. I didn't copy 925. I did something wrong. Give me a second, guys. Let's undo. All right. 1.16825. This is gonna be actually be. I forgot to change this to 1.16725. The title. If that's 1.16725, this one will be 1.16625, so on and so forth. There we go. Sorry about that. All right, so on and so forth. So when I'm just doing the template, is a little bit different when it's come to like when it's time for me to build trades on it. But when I'm doing the just analysis of watching how price moves over time in units of 10 pips, this is how I do it. So I decided to divide price over set units. So each unit has a value, and that works when I start putting in risk reward parameters and stuff like that, and I build trades. But for right now, it's just going to be tracking how price is moving over time within that session. So these lines, you can make them fit one session, you can make them fit the entire day, you can make it fit entire week, so on and so forth. All it is dividing price over sets of 10 pips each. 10 pips bullish, 10 pips bearish, and it's going to measure how price is moving within that range that you are analyzing at the moment. So if price moves bullish, this is going to be represent the ATM candle open. The blue line right here, what is now horizontally? No, vertically, this vertical line right here is gonna represent the time, which is 5 a.m. when the session starts, and then we're gonna follow price. So price open here. We move 10 pips higher. I put a green dot there. Then let's say then markets fluctuated. It didn't go 10 pips higher, so I didn't draw the next green line because it didn't reach it, so it doesn't really matter right now. So and it came back, and I use this blue dot right here to represent not a retracement, but a retest. Or if price went up and then went back down, it is plus 10 minus 10 equals 0. So when it's that net settled, I just use a blue dot. Instead of turning this to like a red dot to explain a bearish move, I put it to a blue dot to say that it's neither nor bullish nor bearish from the start. It's more neutral at the moment, and then if price goes back up like it did here, I'll put a green dot, and that's gonna represent when we went back up 10 pips. Then we go ahead and continue doing this. We retest it again. Now we're just fluctuating. As you can see, we're consolidating. But this is a mathematical definition of the price movement of consolidation. And then put another dot there. And then finally, we move another 10 pips bearish. So the first 10 pips back down was a retracement of what was a bullish 10 pip move, and it came back down. Now the next 10 pips is confirmation of a reversal as well as indication of a bearish move. That's why I put this red dot there. It's actually a bullish move. I mean a bearish move, a complete move, not a retracement. And it did it again. We went 10 pips bearish again, and then we reversed 10 pips. So put the blue dot back. And then we kind of fluctuated. I'm not gonna put another dot here because the candle closed. I could do it. Let's do it. At the candle close, which is here, we actually did touch that line again. Sorry about that. I meant to put a red dot. All right. So now, Jesus, I'm tripping. Red dot, red dot, red dot, red dot, red dot here. All right. So now what we see here is a detailed explanation of how price is moving over time and in proportionality, and that's going to definitely help when you are starting to trade. So as you can see, markets went 10 pips bullish, 10 pips bearish, down. So we had now a net zero. As you can see, we're back on the entry. Sorry about that. We're back on the 8 inch candle open, that line or that general area. We tried to move down a little bit, so we don't count these little 5 pips move until we start talking about actual trading and my strategy. But this little 10 pip buffer doesn't really matter. We went back up 10 pips officially. So it's a range. So I can't say is if nothing is exact in trading. Only sometimes things end up being exact, and that's like really coincidental at times. But yeah, so it's a range between 10 and 20 pips. That's why I say markets move at least 20 pips every day, and you could build a trading strategy based off of just a 20 pip move, which I did, and we'll talk about that, and I'll show you that later. But this is a definition of how price move, and these are also timestamps. So if you measure the distance between these two dots and these two dots, it's going to give you a explanation of how price is moving over time. So if you could say, oh, markets move 50 pips in session 2, if you divide what 50 by 12, which is the amount of hours, 50 pips divided by 12, the amount of pips divided, you could say market's been moving 4.1 pips an hour. And that's help you with like averages and stuff like that, like ATR, like I see some people commenting. But right now, we're just using it as a visual representation to track how price is moving over time over a set period of time. All right, because like when I was measuring the range, I was measuring the simple highest and the lowest point, but there's a lot of detail that happened within that that was important. And this is gonna help you be able to trade, hold trades, know when to get out of trades, understand when prices move, I mean rallying, and right when price is retracing, and where price has made a reversal. Right now, I don't think my boxes are aligned. I'm actually supposed to have my boxes on 4:55 and not 5 a.m. on the dot. So I do got to make that small adjustment here. Whenever I go from like the 1 hour down to the 5 minute, I notice I have to adjust my boxes a little bit because it don't exactly be on the proper line. So you gotta always, I won't say always, but periodically check to make sure your boxes are aligned, even if it's off by 5 minutes or one candle or one bar, whichever you want to use. It is important just to make sure your stuff is aligned. I think I gotta put this one actually, this blue one. And it's kind of difficult sometimes, so let's see if we are lined up. Yes. All right, we lined up now. All right, we could go ahead and move on to, at least I could say we have moved what, 20 pips bearish to the downside, about 20 pips, and what, I must have deleted the line. Sorry about that, guys. Let me put that back. Um, 16. Yeah, there we go. Back normal. Okay. And then you could also call it what, level one, level one, bullish level two, bullish level three, bearish level one, bearish level two, or L negative one. Um, well, there'll be L negative one or L negative two, L positive one, L positive two. That just means 10 pips bullish above the 8 a.m. kind of open, so on and so forth. Now, for the next one over here, I think I'm gonna have to put it on the wrong candle. The 4:55 candle close and the 5 a.m. candle open, it should be usually be the same exact price. So ain't gotta worry about that right now. Yeah. Now I'm aligned. I was just off by five minutes. You don't have to be alerted, just visually. All right. So if 5 a.m. can I need the 5 a.m. candle open, or you could put the 4:55. To do the 5 a.m. candle open is going to be 1.16867. 1.16867. And I'm gonna do this one a little bit faster, all right? So I got the data 1.16, like 867, that's what I said. 1.16, yep, 867. You know, you gotta make sure your numbers is right. That's why I made the program. I have a program that does this for me on MT5, so I'm not making less errors. There we go. And then as you can see, we didn't move too much bullish above the 8 a.m. candle open. So I could still, I usually just project at least one, even though we didn't reach it, and it won't probably be in the session in the box. But I just like, just for visual purposes, I do at least one bullish line above and one bearish line below, even though we might not have reached it with price action. It's just more visually appealing for me. 1.6. Why did I do that? I was supposed to cut. I was gonna copy it. That's what I was gonna do. And then we already know you add 0.001, but you don't have to do that with a calculator. If this is 1.16867, 10 pips above is gonna be 1.16967, and it's just a simple fact of just adding one to the third decimal. Copy 967, paste. Go here. We're gonna paste. And then I'm gonna try to do this a little bit faster, guys. Let's go ahead and mark off our bearish ones. You can subtract 20 pips this time, which is gonna put us at 6, 7. Copy, paste, paste, and it's gonna be repetitive. It's self-explanatory at this point. Don't have to be a rocket scientist to be able to repeat the same process over and over again. 6, 7. Copy, paste, paste. Uh, 5. Copy, paste, paste. 4. Copy, paste, paste. Majority, the only thing you're gonna do is get a lot of cramps. So all this typing and copy and pasting. But it's let me fix that up for you guys. I'll be tripping, I'd be tripping sometimes. I didn't clone it. Midnight clone it. Clone. There we go. Do, 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 do. All right, that should be a lot better. Let me go ahead and do one of these right here. One of, one of these bad boys. Uh, I could do that over there too. It doesn't really matter. Um, just like a start line. Like it just represents. All right, this where we start at. Yay. You might not even be able to see it, but it doesn't matter. Now we can do the same process that I did with the last one, by identifying the line. So this one we touch right here. Touch right here. First reset. Then we had a quick reverse. And I hate when markets do it like that very fast. As you notice right here is around 8:30. Didn't have to tell you, but this is where it was news. So markets definitely move a lot, very volatile. So you have a lot of dots. Sometimes I don't draw all the dots because markets just be bouncing very fast. So it's all those dots overlaying on each other don't really help you with anything. What in the hell? Let me go ahead and draw the dot. I'm gonna zoom in because I don't know what the hell happened there. I think my computer refreshed. And then markets melted, dropped down. So the last few days, I just been missing out on a lot of trades just off the spreads. Always 1, 2, or 3 pip difference that just taking me out of trades. Ah, it sucks a little bit. I just got to continue optimizing my work. And then what? That's why I like these videos, putting me in front of the people. I knew that's what I was gonna do. I just didn't know I was gonna go viral. But yeah, just put me in front of the right people. And a lot of people they watch the videos and they know I'm on the right track. But yeah, yeah, help a brother out, man. Go ahead and DM me if you think there's something that I could do to um to make money faster trading, go ahead. So I don't have to sell like a course or anything like that. I'd rather just do it all for free, but I gotta sell something so that I could at least have some play money to I wouldn't say play money, but capital to live money capital so that I could trade. I do have that's why I have my own prop firms to know that I put my own skin in the game and everything like that. So, some money won't hurt nobody. All this free game. I'm not gonna have no problem giving free game, no problem. Never a problem with that. Well, yeah, man. Wait, like, comment, subscribe, do all that stuff. Share. All that stuff that YouTube be talking about. And we're gonna do this for the next few days. Okay, no, no, no. I think this line is good. No, we could push it back one. And let's put you right here. And let's put you right here. Oh, we got one more. And let's do like this. All right. There goes the power. Watch this. Perfect timing. All right, now go ahead and figure out 8 a.m. candle. I mean, I keep saying 8 a.m. because that's how, but that's honestly what I trade 8 a.m. I don't trade 5 a.m. But since we're doing analysis, I'm gonna analyze off the 5. So 5 a.m. candle open is 1.16254. 1.16254. Double check that. 1.16254 it is. All right. 1.16254. And now sometimes I get good at it where I don't even have to, before I even confirm the candle open, pretty much draw the line right on it or close enough. Your eyes get that good. And then do the same thing, but at least this one has some bullish, some bearish move. Um, yeah, give me a second. And you know the recipe. 1.16254. Copy. It's gonna be 1.16, what, 354? It's gonna be bullish, bullish, uh, coordinates, paste, paste. And this is also important because when you're moving around and you're just dragging the screen and you're looking at all different types of data, it looks like it's all the same size, but it's not. It's what's called not to scale. The more you scroll, it resizes and resizes. So visually, you're thinking that you've seen how prices moving, but some days are bigger than other days, and it might look to like it's the same range, but it's not. Especially when you have these big monitors and stuff like that, you got to be careful. Make sure. Just test it. Yeah, just making sure my mic is still plugged. You see that? It basically didn't even move that line right there. Uh, when you're doing it in real time, it's less grueling. I just had to delete everything on my chart and redo it for you guys so you can see it. Uh, you're only doing a little bit out of a little bit. It's not that you have to do unless you're analyzing back testing, then you have to then you have to do it. And I've been there, buddy. I've been there doing 100 plus days. No, how much is in the days in the trade? Like 200 something or 300 something trading days in a year. See, I'm talking, I'm losing my train of thought. Copy, paste, paste. So I'm not a genius or anything like that. Just slowly but surely, and connecting to the universe, I kept on getting more information, more information. So nothing is really. I don't like to say I invented or I made it this and everything like that. I just coined phrases and gave things names. All of this stuff is free. It's like we all have the same data basically. I just put all the information. I just organize the information in a way that is pretty cool. But I don't own any of the information, and I call majority of the information. I call them discoveries and not really inventions because they already existed. It's just that I wasn't privy to it at the time. Yeah, this is the biggest day of the week, so this is gonna be once I get done with this one, the rest of them should be a breeze. It definitely makes for a good filler. So the YouTube videos could be longer, I guess. If you want to skip the process, you go ahead. I think on TikTok, I probably fat is zooming it. I mean, I'm fast forwarding it. You gotta sit through the whole process. And a lot of wise guys in the comments saying all this stuff. Wow, but I love constructive criticism and stuff like that. I know trading community, everybody think that they're, that guy. Especially when you're making money, you definitely feel like that guy. You definitely think that, a lot of people, we're a lot of loners, introverts and stuff like that. So we be thinking that we making all types of discoveries and we're like the next Tesla or whatever like that. I don't know. Just get a little self-centered when it's just you versus you. 1.16254 is going to be the 1.16154. Uh, I need to upgrade all of my computer stuff. 'Cause my laptop running too slow. My mouse is not ergonomic. Probably want a standing desk and stuff like that. Or a loved one. Make a lot of this work a lot easier. That was bound to happen. My brain getting tired. Yeah, man, you definitely need breaks and stuff like that. Oh, zero zero one eight. Think we got one more we could squeeze in there. All right, and then we're gonna start at 5 a.m. Contract price. This black dotted line, you'll figure out the need for it in a little bit, just not right now. Yeah, you're not gonna understand. All right, let's start. All right, let's read data. All right, we move 10 pips bearish. Do-do-do-do. Dropped another 10 pips bearish. Dropped another 10 pips. That's a total of 30 pips, around 30 pips bearish. Then we tried to reverse, but we didn't. And we continued on moving down. Move down. And I'm gonna show you something cool. I don't think I did it on the other one. Nah, I'm probably not gonna do it either. Move on down. Let's keep it simple for this video right now. Move on down. So that's 10, 20, 30, 40, 50, 60 pips bearish. We did have a 10 pip retracement. And guess what it retraced to? Right over there. Yep, let's keep going. Now, market momentum has slowed down. You seem to not be able to sell past that low. And we're gonna skyrocket. How much is that? 10, 20, 30. You could actually guess 15 pips. If it's 159 divided by 10, you could say 16 to 16 to 15 levels or pips. My bad, I missed one. And we're back at the 80M candle open price. Now, on the larger time frame, this is gonna flip colors from red to green because the market price is above the candle open price, signifying a bullish candle. Even though we move bearish from almost half of the entirety of the candle. That's why bullish and bearish is relative, I would say. It's relative to what time frame you're looking at, it's relative to what time zone you're looking at, so on and etc. I believe markets are both bullish and bearish at all times. Um, Predominantly bullish and bearish, but you'll have to define the time frame that you're referring to. And this is going to be one of those things. And this is going to be one of those things that I'm worried about. Viens deux fois, viens d'aller. Okay, merci. Sorry about that. And then these are one of the times I'm talking about. But I'm going to label it for you guys now. But usually I'm not gonna overlap my dots like that. It's irrelevant, actually. Not irrelevant when if you want to put all the data out there and understand how markets move in a small time frame, um, violently. But when it comes like plotting it like this, it's just gonna be a whole bunch of dots overlapping each other. You technically get the gist. We did move very bullish. um, and then we definitely move. This day has more dots than the other day, right? But this day has the same amount of time as the opposite. So that's another piece of information that's very valuable. Go ahead and say we just started from bearish again. And these movements are where you get your profit at. The wider the range, the bigger the profit or the stop actually as well. That's vice versa for sure. But the more movement that is, the more possibility to get in and out of trades. If there's no volatility or no movement, you can't get profit if um your entry point is not away from where the market is and definitely in the direction that you chose. So if you're in a buy, your entry point, your market price has to be above your entry, and if you're in sell, market price have to be and stay above and or below your entry point. So all of these dots here represent 10 pips of price movement. And when you start trading proportionally, you'll see how important and how to calculate that not only in pips but in dollars, which is very important. And the fact that it's proportionate is going to make calculating your profit targets, your stop losses, your entry, and making your entry, exit, and exit points easier to calculate, and you'll be able to see them visually. So it's a lot better than that blind trading majority of people be doing. Uh, Not to if it makes money, I support it. I'm not knocking anybody way of trading. I believe trading is depend on the type of person you are. I just want to make the way that I train a lot more universally applicable, repeatable, and mathematically explainable. So that I could be able to hold conversations with a lot of people anywhere around the world because math is universal language, and hopefully we could work on making this something that can make us a lot of money, so we don't have to join that rat race where everybody else, and we can actually live a productive life of fulfillment, doing things that benefit the people that need it. All right, so that's another day's worth of data. So we go ahead and say we have 10, 20, 1, 2, 3, 4, 5, 6 levels or around 60 pips of bearish movement below the ADM candle open price, and you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 90, around 90 pips of bullish movement above the ADM candle price, but markets had to move 60 pips lower. Then it pivoted around around this area to move Let's count the entire level. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Like I said, 159 pips divided by 10. Gonna give you 15, around 15, 16. We have some spare. You see some extra buffer at the bottom and the top. That's why we just don't. If it's not a complete 10 pip move, is I don't register it. Just to make the math a lot cleaner. So there we go. You got the move, and then we could go ahead and finish out for the rest of the days, and that's going to be how we track price over time in different sessions. Like I said, you could drag those lines across the entire day. You could drag those lines across the entire week, but that's just going to be a lot of information, a lot of data. I don't have anything at the moment that I could go ahead and collectively put it all together that I worked on to prove that it's profitable. So I'm just going to analyze the data that I felt like was important, which is the data between 5 a.m. to 5 p.m. that I believe that's where I would be doing the majority of my day trading. Not, I believe, I know. Like I said, let me double check my boxes, make sure that they are aligned. I'm gonna leave it at 5. No, I'm not gonna do that. But over there, let's figure out my 5 a.m. candle open. 5 a.m. candle opens at 1.16015. Let me fix this up a little bit. I could choose any one of these lines and do that. 1.16015. Copy, paste, paste. Like I said, even though I know we didn't trade above that much, 10 pips above, I just go ahead and draw it anyways. Because I want to. And then you guys know all we gotta do is add 1 to the thousands right here. Yeah, we should be good. Then we can go ahead and pull our bearish levels by subtracting 20 pips. Double check that. Yeah, I was pretty close anyway, so that's cool. So yeah, 615. Tripping. Yeah, I mean, I'm not perfect, guys. Not perfect. In trading, man, you get one typo, man, you are off. My little line, my start line. I must just go. All right. All we doing is figure out, plotting the intersections. Like I said, we still haven't done anything that's like too mind-boggling. Nothing that's confusing and stuff like that. Just simple price action, simple charting techniques, charting tools. Thanks to TradingView, you're able to draw on charts. I believe years ago they weren't able to draw on charts, but the math is still gonna identify itself. The math is that's where it all is. Whether you have the charts or you don't have these charting platform, if you look at the numbers is all that you need. It's just people interpret the numbers differently. That's it. But as long as it make profit, you're doing something right. Like I said, I'm probably gonna work on something to go ahead and plot this information on a spreadsheet. Plot this information so that I could go ahead and use computer programs to analyze this analysis data faster than I probably could. Like something like this, I don't consider. It depends on your broker. It might be spread. It might not be area where you was tapped in for spread or considered because like different brokers have different numbers. I just put a little swirly line. This means maybe, maybe not. It depends on you, or it depends on what your bro. It depends on your broker if it is an area that actually is 10 pips, depending on a broker. Just gonna let you know that. Almost done here. Do 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 do. Right, and then we have last but not least day 5. And you can see markets move bearish 10 pips, bearish another 10 pips. That's a total of 20. That's a total of no. Then it reset, went back 10, went back down, went back up, went back down, continued lower, came back up, pushed all the way up here, down one, up one, consolidated within this range. Then went up back to the 8 a.m. I mean 5 a.m. candle open price, back down 10 pips. It's staying below the 8 a.m. candle, so it's bearish for the entirety of the day with a maximum of 10, 20, 40 pip rally to the downside around 5 a.m. to 8:45, and then we retrace all of the 40 pips and just stayed a range of about 20 pips below the 8 a.m. candle. I mean the 5 a.m. candle open. And you see how everything that I just said is statistical data that can be verified and traded. And we're gonna get to the trading portion. I know you guys waiting for that one. But you need patience. It all comes together. A young grasshopper. Oh. All right, we should have fallen flush. Now, last one. 5 a.m. candle open is 1.16355. Doesn't really matter if you draw the bullish line first or the bearish line first. It doesn't really matter. 1.16455 would be the next level. Six, 455. 1.164. Telling you sometimes them typos be getting to me. What in the world? Hmm. There we go. I'm gonna go ahead and I'm gonna go ahead and plot it while I'm working on it at the same time. Think we can squeeze one more in. I might not be right with this one. Might be a little too optimistic with this one. Oh yeah, definitely not. But for visual purposes, we can leave it there. Doesn't really matter. Alrighty, let's finish plotting how markets has moved in that 12-hour session. Bam, 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 bam. That is a reversal. This is confirmation. But markets had already left, so probably would not be the best. It's a laggy indicator. And we consolidate around this range of 20 pips. We don't hit above or below until market shut down for this is the end of last week, so we don't need any more dots. And that's it. So we have 30 pips bullish, around 30, 35 pips bullish north of the 5 a.m. candle open, and around 10, well, you got 15, around 15 to 18 pips range. If that's 10, this is then his next 10. Yeah, around below the 80, the 5 a.m. candle open. And then that's where you're gonna build your trades. If you can understand how trades are, basically that a trade, your entry from your stop loss is a set amount of pips. Your entry from your take profit is a set amount of pips. And if you trade within these range of pips, then you'll be able to know what to expect. Like I only trade within a range of 10 to 20 pips because I know I can expect that on a daily basis. And then I do have a trading stop method that is for a long term or a longer term, like more than an hour or so. Um, that I'm working on. But this is how you divide market price action. This is how you divide price action mathematically, and explain how it is traveling through time on a proportionate basis and just not on a range basis, because the range that I was measuring, there's a lot of price activity that happened within that range, and this is how you define that price activity that's happening within that range, um, and that's how you be able to trade it. And then I'm gonna go ahead and then do one example. I don't. Today's Monday. Yeah, today's Monday. So we'll go ahead and do an example of today price action and the projection, and I'll be able to do the same thing, explain to you how markets have moved in this session too, as what today, July 21st. Wow, my time has flown. All right. Not to say, like I keep saying, not to say that all the rest of the information, like what happened in session one, doesn't matter. It definitely does matter, but in terms of how I am trading and analyzing, I just need as much hyper focus information that I could get out there. And the way that I trade, I don't have any bias. So if market I let markets show me whether it's gonna go bullish or bearish. And whatchamacallit, and I only trade within the range that I knew I'll get on a daily basis. Not to say that we don't have big days, but the big days, especially not throughout summer, as common as it is. So I just know what I know I can consistently make my profit. I'm just gonna stick with that unless I have proven something better. So let's go ahead and figure out the 5 a.m. candle open price is You see what I say? It's not aligned. And all I did was copy and paste it. That's why you have to put the markers in proportion. There we go. There we go. Let's get it back to how it's supposed to be. There we go. 455. And there we are. Let's double check. 530. No sorry, Bob. Too big. Too um, and that's more like it. Okie dokie, 5 a.m. candle open price is gonna be at 1.16422. 1.16422. You can ignore those WhatsApp. It's probably spam or something. All right. I think I could squeeze one down there. Hold on. Let me get my start line. Let's see if I can squeeze one in the bottom. 1.16322. Almost there. And let's go. Let's see how bullish we went. Remember, price action is not complete. As you can see, it's not 5 o'clock here. It's 2:45. Market switch over here. That's when we have the finalized price action, the finalized highs and lows, the range of the day and the range of session two. That the complete final version of it. And let's go to my bullish lines. 1.16522. All right, and let's track how price moves starting at 5 a.m. And looks like first 10 pips happen right here at 7:05. Next 10 pips happen over here at around 7:20. We moved another 10 pips around 8:10. We had small retracement. I'll say let's throw it at 9 a.m. And then we continue our move bullish. Remember, look at this. We had one retracement and then back and then the rally. So that's very important. Sometimes you might have just one retracement, retest, and then rally. That's what you see as a pattern. The sequences in which these dots happen have a mathematical implications as well as reveal patterns. Green, green, blue, green, 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 blue, red, red, something like that. And these patterns have a range, and if you trade within that trading range, you can be in and out of the markets. And all you did was have a look at colors and dots. Like, oh, my trading. What's your trading strategy? Three greens, a blue, and three more greens, and you just cost 60 pips. But if you got three greens and then a blue, then a red, and you say, oh, markets might be reversed. It might not be a good time for me to be getting into the markets. Got some greens, the blue dot, and then now we have going to a red that may indicate a reversal or a change in price, or you might come back up. You never know. And right now we're fluctuating right now into this range. And then I can go ahead and do that little start line, and then I'll show you guys how to do trading analysis is what I call how, and this is technical analysis. Now I'm going to show you how to do trading analysis to do the mathematical calculations to first prove yourself that there's profits in the market, um, as well as trade it, as well as calculate your profit and loss before even getting into a trade or without even having to get into a trade. And then we'll work on that later. Go ahead and move over my data. Killed two birds with one stone and did my analysis for today. I did get into a trade today. I got stopped out by 1 pip. But that's the nature of the markets. That's why I have multiple accounts. I have 3 accounts, and on the Blueberry Markets account, I didn't get stopped out. But the FTMO account and the IC Markets account, I did get stopped out. But IC Markets, I would say the spreads is a lot more accurate. So I'll take the opinions of the IC Markets and say I did get stopped out. Now I'm looking at maybe now I finally believe I'm on the cusp of being able to change the range that I have for my stop loss. I put it big on purpose with 3 times the size of what I usually take my profits at. Just so I can see how market fluctuates within that range. And now I'm gonna go ahead and I'm gonna tighten it up because I know that my average winners have a set amount of drawdown, and my average losers have a set amount of drawdown as well. And I'm seeing some telltale signs on how I could optimize it. Now I just have to back test it, uh, and then I could go and implement it. Uh, and then session 2 is not done yet, and then day 1 is not done yet, so I don't need to put anything in here. I could go ahead and project the week, but I feel like it's too early for that right now. All right, guys. So this was a quick video on how I track price action, proportionately, using MagnOpus template. There you go. If you have any questions, go ahead and ask me. If you want to DM me, go ahead and DM me. I'm answering DMs. If you want to work with me, let me know. Continue dropping these videos. I just like to structure that I'm doing. I just want to do everything one time. And then I'm trying to learn how to do this content stuff. All right, guys. If you don't know if you need any more help, just hit me up. I'll be glad to help. Like, comment, subscribe, share, tell your friends, start conversations. Let's get into a group where we all could talk to each other, man. I'm tired of doing this by myself. I'd be bored as hell, especially when I'm watching the markets. I just need somebody to talk to at this point. And now we're on the same page. That's gonna be what's up.